Hi, my name is Kat Steinberg, and I'm with the SEC's Small Business Advocacy team. Welcome to Let's Talk Small Business. In this episode, I will be speaking with Molly Otter, who is co-founder and investment partner of Sage Growth Capital, an Idaho-based investment fund focused on investing in early-stage businesses in Idaho and the Pacific Northwest using revenue-based financing. Before we get started, I want to note that everything I say today is on my own behalf from my position in the Office of the Advocate for Small Business Capital Formation and does not necessarily reflect the views of the Commission, any of the commissioners, or any of my colleagues on the staff. Molly, it's great to see you and thank you for joining me.
Thanks for having me, Kat. I'm excited to be here.
Awesome. To kick us off, would you please introduce yourself and tell our viewers a bit about your professional path?
Sure. As you mentioned, I'm the co-founder and the investment partner for a company called Sage Growth Capital. We're based in Boise, Idaho, and we do revenue-based financing. Prior to that, I was the CIO or the chief investment officer for a company called Lighter Capital, which does SaaS-based revenue-based financing across the country and is kind of considered the leading provider of that. And then before that, I was on Wall Street at a firm called AEA Investors. I did mezzanine and senior debt financing. So I've spent my life on the debt side of the world and really enjoy it.
As you mentioned, Sage Growth Capital focuses on revenue financing, or what we sometimes hear called revenue-based financing. Can you give us a brief introduction to what it is, how it differs from traditional funding options like bank loans or equity, and how it fits into the small business capital formation ecosystem?
Sure. So revenue-based financing or revenue financing kind of sits between equity and debt. We like to say it has some of the good qualities of both. So the way that Sage does it, we'd use a convertible note. So like an equity or angel investment, that's the type of vehicle that we're using to make these investments. Unlike equity, we don't take any equity ownership. So it's a non-dilutive product. Like debt, we get paid on a monthly basis. But unlike debt, we don't get paid the same amount on a monthly basis. We get paid as a percentage of the company's revenue. So when the company has a big month, they pay us more. When they have a smaller month, they pay us a lot less. And so we think it really helps align well with the company's revenues as they go over time. So it might work really well for an education company that gets paid twice a year, or a SaaS business that has big annual contracts that just gets paid once a year by its customers, so that it doesn't spread those payments equally over the year. Rather, those payments are made when you actually have the cash on hand, and keep your gross margins consistent from a cash accounting perspective.
What's a typical range in size of an investment that your funds make?
So our funds make investments from about $100,000 up to $1 million, but on average, we're at about $250,000. And generally, we do multiple investments with the same company. So we'll start out smaller and then add to those investments over a period of time. We like to align ourselves with the company's growth because, as you can imagine, with revenue-based financing, as the company grows, the more we get paid, the faster we get paid back. So we want them to use our investments to grow their business, which also helps with the company. If they're using our investments wisely and their businesses are growing, then we can give them more capital at a less expensive cost. So it kind of works well for both parties. And so we tend to do smaller investments and then add on as the companies grow over time.
And how large are the funds that you raise?
So we raise a max of $10 million funds. We try to raise them every 2 to 3 years. So based on our investment thesis and how quickly we're putting money to work. But that's because on average, we're doing about $250,000 transactions. And so that's about 20 companies per fund, which is a lot of companies to manage from a portfolio perspective, but works really well in the small business community because about $250,000 seems to be a good area to start with, and not a lot of people write those size checks.
And what is your investors' average check size?
So on our end, our investors are mostly angels, which is great. They send us a lot of their deal flow for companies that aren't going to be kind of the next IPOers there, because we don't need that for our investments to work. And they are between $50,000 and $100,000. So we have a lot of investors in our funds, which is nice.
I'd like to drill down on one of the characteristics of this type of financing, and that is the non-dilutive funding. One of the recommendations regarding early stage capital raising at this year's annual Small Business Forum was expand regional, federal, and state options available for non-dilutive funding or debt forgiveness to support the earliest stages of entrepreneurship. Molly, if Congress or the Commission were able to do that, what should that look like? Is that something where revenue financing could play a role?
I definitely think revenue-based financing could play a role there because it is non-dilutive financing by its very nature. I don't think there are a lot of players out there who are doing it, who are taking capital or any equity. Sometimes there's warrants involved, but that's kind of limited. It is a great form of financing for businesses in terms of not taking that equity portion of it. There are probably other options out there that you could do. The problem with debt forgiveness is there is an IRS impact to the companies if you forgive debt. So that's something that those companies have to think about longer term. Whereas with revenue-based, you're paying it down, so you're not going to have that debt forgiveness impact. I don't know enough about what other options there would be. I will say that one of the problems we run into as a small business ourselves is that each state has different regulations. And since we're not a national bank, but yet we have some bank-like criteria to our investment, we have to be really careful about which states we go into and what the regulatory environment in each state is. So we go and look every time a new company comes to us in one of our contiguous states that we may not have invested in. We have to go spend the legal resources to figure out if that state works, if we're going to run into any issues, if there's anything we need to be aware of. And that's getting more and more complicated in today's environment where you're headquartered and where you're incorporated may not be where people are actually sitting. So those type of things play a big role in our decision making. So if there was something on the national level that could make it easier to make these investments across the board without having to do individual state analysis, I think that would be really helpful.
Agreed. Switching gears, you are in a non-coastal area. So we hear from entrepreneurs and others often that if you aren't situated in one of the coasts or in a major hub, securing funding for your small business can be more difficult. You're located in Boise, Idaho, and you focus your investments in non-coastal regions. What are some of the challenges you see that are unique to or heightened for funds and entrepreneurs outside traditional hubs?
Well, there's definitely less capital providers sitting in places like Boise, Idaho. Like we are very unique in our region. There has been some uptick of people in doing financing in Boise, but when we started, we were kind of the only people in the game. And I think that's interesting. I also think that there are great benefits to being in small areas. Like when we started, the governor's office was excited that we were starting a business here. Like that's not something you're going to get in New York State. So you kind of have to take the good with the bad. And as a small business, you have to think, okay, what are the things that I can use to my advantage? It's a small community. So I bet if I meet one person, they're going to know 5 other people in my community that may know who the right funding source for me is. And so that may actually be easier if you're willing to get out and go to a couple different meetings and do coffees with people to get to know them, because with these non-coastal areas, people all know each other. So they're more likely to be able to make the right introduction for you faster than maybe on the coast you would see. So I think you have to kind of take the good with the bad on that and go with it. I mean, there are less capital sources for sure, but that doesn't mean people aren't putting money to work and aren't interested in investing in good companies.
That brings me to something else we've been told repeatedly, and that is that networking and building your community is one of the most important things a founder can do while growing their company and seeking capital. What practical advice would you offer an entrepreneur who thinks they want to bring on investors or even just wants to start building their network?
Yeah, I mean, it is the most important thing is getting out there and meeting people. And I would say go to your, local chamber of commerce, get to know the people who are out there. In Boise, we have something called Trailhead, which is the local run organization that tries to help companies small businesses start up. So there are lots of organizations like that. And you do kind of really have to go out there and meet people. As I was mentioning before, most of the investors in Sage are angels. And because of that, they're out there having a lot of coffees, and we get 90% of our deal flow through them saying, hey, I met this person. It wasn't the right fit for my style of investing, but it might be the right fit for Sage, and making those introductions. So it's really about just going out and meeting people. And I know that that's sometimes hard as a founder because you're like, I have to focus on building the business that I'm trying to build. But a lot of your time really does have to be spent out there introducing yourself to the community, because if the community doesn't know who you are, they're not going to be able to point you in the right direction in terms of finding the investors that work for you.
Great advice. If you've watched our previous Let's Talk Small Business episodes, you know that we like to end on a light note with a lightning round, a quick question for a quick answer. If you were to start a small business, what would it be, Molly?
Well, I think Sage is a small business, but on top of that, I would start a bags business for going to camp with kids. I have three kids who go to camp, and it is always a disaster. They can never say that they can't find the stuff that I have packed for them, or come back missing half of it, or it's just totally disorganized. And there's a type A personality that drives me a little bananas. So I have looked into this with another mom who also is in the same boat. And we were like, we need to do a better bag for camp because the trunks are too big and the bags are too light and it just doesn't work. So that would be what I would do.
As a fellow mom, I look forward to seeing that on the market. Good luck.
Yeah, thank you.
Molly, this was fun. Thank you for joining me today. I am excited for more entrepreneurs to learn about revenue-based financing as another way to fund their small businesses.
Yeah, well, thank you so much for the time, Kat. I really appreciate it.
Absolutely. Hope to see you soon.
Thanks.